Right. So testing phase 2, after you complete testing phase 1, which is all about finding out questions and, solving problems. Testing phase 2 is where you actually go and you test your setups and you try and mimic real world conditions and, how you perform in those conditions. And you can test more refined setups. You can test individual setups. You can find win rates on those. Okay. So for example, we're only going to be trading pro, maybe not pro ISP, we'll do pro daily bias. Okay. So we're going to look, well, obviously pro daily bias. We're always trading pro daily bias. So we're going to have to identify daily bias. We're going to trade pro MTF ISP. Okay, let's keep it simple. We'll trade pro to the MTF ISPs, no counter MTF ISPs. And we're going to look for CO on M15 or M5, nothing less. Okay, so now we have basically what we're looking for, very simple, but what does this look like, right? So we're going to want to draw a little diagram of what that looks like. So our daily bias, for example, is going to be bullish in this little diagram. So we're just going to say this is our daily bias. Daily bias is bullish. Okay, so we're going to make sure that MTF ISPs are bullish, like so. Okay. So we're going to map out ISPs. So you got ISP, right? Got an we got an FEG in here, like so. Okay. So now we're trading pro ISP. So we're going to wait for CO on the M15 or M5. So what does that mean? That means when do we engage with order flow? Okay, when do we engage with our entry model? What do we need to look for? Two things.
When we have like a draw and liquidity.
Okay, and an extra, right? Yeah. So this is it. If you don't have this, you don't have it. You're not trading the plan. Okay. So we're going to look for this. So we're going to look for a draw on liquidity, next draw on liquidity. This is either HGF or MTF. Okay. And we're going to look to trade the M15 or M5 order flow. Okay. So now you can see we actually have a measurable trading plan that's more than just concepts, right? And look, it's very simple. We don't need a hefty checklist or big old flow chart or anything. We just need a little setup. That's it. Just one setup. And then eventually you can compile these and turn that into, if you want to, you can turn that into a checklist. I personally don't really care for those, but that may help you. But you're going to have to make it yourself, right? Like a checklist is best when you've done it yourself and you've done the testing and you know it works for you, not just take my word for it. I do have a checklist actually to the right of me, but I never use it. Identify daily bias, trade pro MTF ISPs. So if the ISPs or institutional structure is bullish, we'd be trading buys. And then we're going to wait for a doll and next draw on the HGF or MTF. So we have a daily bias and then our MTF draw here in the FEG. And the next draw would be like maybe whatever the high, the day or running the previous day's high or some shit or like that, right? So this would be like your next draw here. And then we're going to trade the order flow on the M5 or the M15 to that draw. Okay. So when we have a drawn liquidity on a 4 hour, for example, what do we expect? Where does order flow, how does it affect order flow when you have a drawn liquidity? Does it affect the current time frame or does it affect the lower time frame or a higher time frame?
Yeah, like a lower time frame.
Yeah. Okay.
Start to.
Exactly. Okay. So don't forget that this is one of the major and most important things about the whole trading plan is that when we have a drawn liquidity, lower time frame is where order flow takes control. Okay. On a lower time frame. So if we have like a daily sweep, we're going to expect like the 1 hour to start to take control or or lower than the daily, obviously, right? If you have a 1 hour sweep, maybe the 5 minute takes control. We don't know. We just have to go and figure that out by looking into it. But this is it, right? This is literally going to be our entry model for right now. Right. And let's even take this a little step further. We're going to wait for. There we go. So now we have something very clear and basically measurable. take on liquidity. That would be rule basically 3. We have an FEG here, rule 1 or rule 2, 1 FEG, right? There we go. So there. Now we understand exactly what we're looking for and how we can trade this. And this is the only setup that we're going to trade. Okay.
Cool.
So I'm going to go into chat here. Boom. Okay. So now you guys have that. And this is what I'm going to test today. Okay. That's what we're going to test. So pull that image up or make sure you remember what that is. Yada, yada. So what's the first thing we're going to do? Huh?
Mark out the ISPs.
What's the first thing we're going to do?
Daily bias.
Yeah. Identify
bias,
daily,
yeah. Mark-
identify daily bias. So how are we going to identify daily bias?
Yeah, follow the ISPs.
Yeah. Step 1, follow ISPs, right? So ISP here, this seems to take liquidity. ISP, we don't even need to go back this far realistically.
Yeah.
But ISP, for the sake of it, ISP and unconfirmed ISP because you haven't
Unconfirmed.
broken the high. Exactly.
Mhm.
Okay, so now what's the next thing that we're gonna do?
Draw on liquidity. Next
yeah,
draw.
identify draw. Yeah.
Yeah, identify a draw on liquidity. So we already know that we're bullish here. We're clearly in bullish order flow, higher ISPs consecutively. We're going to identify where the draw is. So we've had a draw on liquidity here, and we're basically asking ourselves, where did we come from,
And then where are we going?
and where are we going? Yep. Okay, and where are we going? So we can do that on the weekly, basically, or the daily as well, or the monthly, right? But let's just keep it simple. The next area of liquidity, the obvious area is up in roughly in this region here. Yeah, so roughly in this high, you know. If we go to the weekly here, we can see that this sweep, so we'd expect a reaction from here as well. So we can actually look at this last up candle and expect some kind of a reaction to this, right? Because
Yeah.
because it's taken liquidity.
Even this guy filled in some
Push down.
imbalance.
Yeah. So this region most likely will
that's
get a
good.
reaction, 100%. Yeah. We're going to just select that body here. The wick has already been tapped into, hasn't given us anything. So we're going to look at above this high. Okay. On the daily, that means that our next draw on liquidity is basically to run these relative equals, right? So we're going to come up into here. We may get a reaction. We may not. We're going to expect a reaction from here because it's a higher time frame area.
Mm-hmm.
When we come into a reaction, when we get a reaction, what are we expecting? When we come into a higher time frame key level, which includes basically a POI or form of liquidity, what are we expecting? Lower time frame.
Displacement.
Yeah, what does that cause?
Like SMBs.
Yeah, lower time frame structure to fail. Okay.
Mm-hmm.
So if we come into higher time frame liquidity, we expect lower time frame structure to fail. Right? So just fractally. When you get an H4 tap into liquidity, you expect like the M15 basically structure to start to give way, right? Equal or lower. Okay, so we already have a daily bias. Our daily bias is to push in above this swing high. Now we can go into the 4-hour. 4-hour is trending strong and bullish.
Mhm.
We've taken some sell side here, ISP up in here, that gets taken. Doesn't really matter because really our most recent ISP is all the way down in here. So the structural leg is from here to here. So this is just like internally looking at it.
Right.
We have no FEG in here except for one. So if price wants to pull back, it may want to pull back into this region and then push up. So our model is identify daily bias, which we have right here. Trade pro MTF ISPs, ISP and ISP. This is the range that we're in. Okay. So we're only taking buys, right? We've now come down and pushed away. Look for a draw on liquidity, next draw on liquidity, either HTF or MTF, and trade the CO on the M15 to M5. Okay. So what does that mean? Where's our draw on liquidity? If we were to look for one, where would that be?
A draw.
The initial take of liquidity.
I mean, that was this here, right?
No, but I mean now for us to take a trade.
At the top
If-
of the-
If we're good, yeah, right here into the FEG, right? Because guys, liquidity is FEGs, right? So we need an initial draw on liquidity on the medium time frame, right? So we're on the 4-hour, we're on the medium time frame. Where's the next? Where could a draw on liquidity happen that can initiate us into a trade? Would be this FEG, right? We're expecting a reaction. All we're looking for is where is this area that we can then confirm on a lower time frame to take the buys. That's it, right? Mumbo jumbo aside, that's all we're doing. We're looking for a POI to confirm on a lower time frame, right? So this would be the draw on liquidity, and then next draw would be up here, right? So we're gonna see if we get tapped in there. That's it. We don't need to hop between all these different time frames. We're just gonna sit here and we're gonna wait and see if we get tapped into there. Okay, takes it, no more, right? Now we no longer have, because we no longer have a next likely draw on liquidity, we no longer have a trade idea because you need both, right?
Right.
So now that we've ran liquidity, we're going to expect what? We've ran higher time frame liquidity. We're going to expect what on the lower time frame?
Structure to fail.
Yep. So if we go in the 5-minute, we're going to look for lower time frame structure to start to fail. We don't know how high this is going to push up, obviously, but okay, there we go. We have sort of an SMB. This doesn't really break structure, so I'm kind of looking at this low to give way. We're moving into the next day. Okay, continues to push up. Still nothing right on the 4-hour. It's just trending bullish. So we don't really have a support or anything, right? So there's no way we can trade here. See, we don't have any support. We don't have any clear area to trade from. We don't have a next draw on liquidity. We have this initial draw, but now we're not sure if this is the next draw yet. What we need to see is a pullback, that new support that gets ran through basically, and then trade, because this is easier, right? We were already so deep in this leg. We want to see a pullback to basically reset the clock.
Yeah, so now, oh, okay, pushing.
10 a.m. Okay, so this could have been something potentially. Builds up support overnight, sweeps liquidity, pushes up. Yeah, so there's probably something in here that I missed here. This should be on the 5-minute. Okay, we'll just go to the next day, go to New York session, and I'm only going to test New York. Okay, because this is for me, right? I would only trade New York. So when I'm testing these things, I'm only going to test New York. Okay. Again, where's the 4-hour ISPs? This actually does. So we have here. This taps into imbalance, pushes up, breaks structure. So we're going to trade pro ISPs into the draw on liquidity from here to here. Look for a tap basically into this region and then take a buy. What time is it? Anything significant happen? No. We didn't tap into anything that's significant, but if we do obviously start to see structure really start to shift, then we can take a sell back down, trade a counter. Which seems to be the case. But we're not, but no, actually I can't, because we're trading only pro MTF ISPs, right? So I would need to see the 1-hour or the 4-hour shift. But structure currently, at least on the 4-hour, is from here to here. So this is all we'd be doing, is looking for buys. Yeah, so we've built up liquidity, manipulated on the sell side, pushed up, and we potentially have the start of a displacement. this technically would be a tradable region. This reaction up here is not coming from anything significant, so we're still in that bullish order flow. So technically we would have to take this trade, right? Is there any issues with this trade? And I'm trying to think as objectively as possible.
And what time is it? Sorry.
It's 2:45. So on indices, this is fine. Is there any issues?
No.
Yeah, what time is it? At 4 o'clock, I'm going to cancel this trade. Okay, now it's like late as fuck. But we'll see if we get triggered in at 4, and that would be it. Okay, taken out, no problem. All right, so that's the first trade lost. Keep it mechanical and simple. Obviously, I kind of believe that that was going to be a loss, but we're going to keep it as black and white as possible for this. Because it wasn't even in the area that we really wanted to trade in. But anyways, so now we have a push down. Breakdown. Let's see, do we have a 1 hour ISP? No, so we can't trade that. We're going to wait patiently. We'll go to New York session. Okay, this is definitely going to push down now. We tapped into that FEG on the 4 hour. We've displaced away. Taken liquidity. Let's see if we break this high. No clear break, so no trade. Right, just swept liquidity. Pushing back down into that. I don't know what that is. What's this big line here? Oh, that's where we were initially going to look for a reaction. Okay, so we've tapped into this FEG here. And let's see what happens. We need to see order flow shift on our side. So we have a draw on liquidity here below these lows into the FEG. We're going to wait for order flow to shift on our entry timeframes. Okay, really, it's from here to here, so we don't have anything. Okay, pushes down further. This should be like the end of the day now. Okay, go to New York session. Okay. So it comes into the lower FEG. These are not meant to be, it doesn't quite. These are not meant to be very refined things. They're just meant to be, rough areas for us to trade from. We get refined on the lower time frames. Okay, so let's see. We've tapped in there. We still have a draw that's above us. We've pushed down, seen structure start to form, but this is all sub. We don't have a clear draw yet. We need to see a clear draw. Are we going to come below this low? Okay, we've come below this low. Let's see if price wants to start to push up. Okay. We have an FEG. We can start to look at this region here to take us higher right here. Push down. Targeting the next area. Place an order. Buy limit. Okay. And that's why we put the stop where we put it. See, this might actually come back on us. We'll see if we get a breakout. Pay attention to this as well here. Well, let's see here. Does this? No, never mind. This should all be ran. This should all be ran because there's no sweep here. So where's my drawing tool here? When we see these highs like this, and they're not really like running each other. I can't, it's not. Okay, here. See how this high sweeps right here? Pushes down. It's going to be much more challenging to come up above this level. Okay. This high doesn't sweep. it created equals. This high is going to be easy to run through compared to this high initially, right? So price should be pushing up above this high. Time are we at? 120. All right, we're going to get taken out here. There it goes. All right, go to New York session. So 2 losses in a row, no problem. Still coming into that FEG. Let's figure out what our daily bias is. We've held that daily FEG as well. We still have a draw on liquidity that we haven't hit. We've had a bullish candle or a bearish candle, but like a range bar basically. We haven't taken out the low. We're respecting this FEG with the bodies. So my bias is telling me that we'll at least take this high and take this high potentially, right? Of course, we can come down. We can liquidate these lows first. We don't know, but we're going to look for that manipulation, right? So price may want to come take up this low first, push into this FEG here. So now we have a draw on liquidity into a higher time frame POI, and then come and push out through the highs. So our 1 hour is also bearish. We've had an SMB displacement, pushes up, this high holds, pushes down. We don't really have a clear area to trade from, but overall, we're basically internally bearish. We're going to expect that the highest probability trade is going to come below this low and then come and take out the high. See you, Kim. Okay. Okay. Okay, so we have a draw on liquidity here, and we have the MTF on the 1 hour. So MTF can be either 1 hour or like 4 hour basically. But the MTF is bearish here on the 1 hour, so internally bearish. So we can either wait patiently for this low to be taken out, or we could trade to it. You're gonna have to determine that on your own. For me, right now, I'm considering both H1 or H4 MTF, and it has to be in line with the daily bias. And the daily bias is that there's potential liquidation below this low before coming up. So taking shorts is in line with what we're looking for. So we can target like this. Target the low. Let's see here. Let's see here like this. Let's see if we get involved. Place order. This is technically stacked, but so we would assume that this would be a breakaway gap. So it'd have to be like this. Place order. The limit. Yeah, I figured it would come up above there. And take another loss. Jeez. All right. 3 losses in a row. Takes up the high. We're going to get displacement. This is really choppy days here. Holy. Brutal. Okay, so now it displaces. It's not at a great time. Taps into an FEG. Pushes down. Okay, so now we're in a new order flow range. And we can potentially look here. This isn't a type 1, is it? It is a type 1. We're trading into a type 1. We can expect a reaction from there. Let's see if we price pushes down. I don't think I would take this trade. What do you guys think? Yes, you've been you want to step in a bit? Did he leave?
No, I think he had to go for a couple of minutes.
Oh, okay. Brian, you want to step in, or anybody else?
Yeah.
What do you think?
Trying to debate this here. Well, it looks bearish here. We have this break here, another break of structure, and then comes back up in this space. What was the MTF? The idea was off the 1 hour.
Yeah.
I mean, it breaks down there. That's 1 hour. That looks kind of bullish still. Like it looks like it wants to push up there.
Up above.
Excuse me. Yeah. I don't know. I don't think I would take that.
All right. Let's see, holding this FEG. Let's see what we got here. Holding this FEG. See if price wants to come take out equals then and then push down, or if we want to just continue up. What time we at? 6 p.m. So we'll go to New York. Okay. Okay, now we have clear set equals. We'll see if these get ran. This is super choppy price action.
Good.
Okay. We've had a draw on liquidity into the type 1, pushed away, clearly have a draw above us. So there is a potential if we get tagged in that this, well, this trade will for sure work out if we actually get tagged in, but
Yeah.
that will probably not happen. But we'll set a limit anyways. Come on. Ooh, we have a chance here. We have a chance. Oh, so
Oh.
close.
The idea
Unfortunate.
was there.
Yeah. Okay. So now we have to basically see what's going to happen from this region. Just cleared out equals, and we're in choppy price action, so I'm not going to just shoot for the fences right now. We also have a ton of liquidity below us, both here and here, right? So let's see what price wants to do from this region. This is a type 1 as well, so we're coming into like a take on liquidity. There's been no reaction from this region yet. That's major. Okay, runs the high. Interesting.
That's respected.
And now it's pushing down though.
Yeah.
Okay, but we're bullish across the board, so we don't want to take trades here. Although this is probably a good counter trend trade because we're coming from higher time frame liquidity. Where would we target? Would be probably below these lows, potentially below these lows. This is just really choppy. There's really not, it's not giving much overall. We're still in this overall range. We failed to break out of it. In times like this, having a model that's strict to ISPs is not a good idea. And you can clearly see that it's only going to perform in a trending market. But we still need to figure that out, right? So we have to test it regardless. Like I know for a fact that because we're trading a trending model right here, pro ISP is automatically a trending model. It only works in trending condition. This is a range bound condition. This is a consolidation, right? So it's not going to perform in this condition. This is when you start to trade both sides of the market, right? And you ping pong it. So normally I would just skip through this and just trade in a trending environment, but we need to collect data on it, right? So when you're doing this first, you want to collect data and then apply the market condition to it and you'll see, right? Because you need to actually see data to believe it. Like if we run this high, I'm willing to bet that taking a sell here would be the best bet. what is that? Interest rates. Okay, that also makes sense as to why it's so choppy. Interest rates. Okay. So I think, did we run both these lows? Okay, so we ran the lows that we were looking at. The initial lows that we were looking at, because this is all sub, technically. We have a little sweep here. Below that, so let's see here. This is super choppy, damn it. Why do I always pick the choppiest days? No break below this. So the 1 hour range is from here to here. Still no break out of either side, right? We need that body closure, ideally. So let's see what happens here. We're only going to trade the 5 minute or the 15 minute. So if this wants to start trending up. I don't see anything very clear here that we can work off of. Okay, there we go. So we
At the
can,
end of the day too, though.
we are at the end of the day, but it's interest rate decisions, right? That when you have big news like this, generally you get opportunities to take trades later into the day. And we can target that next draw, because if this starts to break up, we target that next draw on liquidity. We'll place an order here. Tapped in. Okay. See, okay, now we can be at break even. I know we don't have a very clear reason to be at break even, but it's so choppy. I mean, yeah, we've have ISP here, and that's about it really. This is just chop. There's no reason not to be break even at this point. Sweep of liquidity. What?
So you're saying like on an interest rate day, you would allow a trade to go out of hours, or
You could, yeah, you could, because I mean, this isn't the best example of it, clearly, but oftentimes what happens is the volume continues a little later into the day because there's more trading going on, right?
yeah.
So why did we trail the stop here, guys? I should have added that into the thing too, trailing stops to ISPs, but we trailed this stop here because we have an ISP and then a breakout. So our order flow range is now from here to the newest high that it's created, right? So this is how we trail stops. And we're going to see to target that next draw. Okay. So we've hit the next draw on liquidity. Now we're up on the account. Beautiful. So you got caught in some chop, but we still pushed it, pushed through, and every trade has been a long because we've been following our ISPs. So now that we hit higher time frame draw on liquidity, one of the two, we don't know which one we're going to get a reaction from, but roughly hit higher time frame key level. What are we going to expect on lower time frame?
Structure to fail.
Yeah, we're going to expect structure to begin to fail. So in other words, we're going to expect a pullback. Okay. We don't know how deep this is going to go into liquidity, obviously. It may even come up into here. We don't know which one it is. Okay, so potential formation of another ISP here. Okay, creates an FEG. This is on the 1 hour. We'd have to see this level to fail. Okay, so now we have an ISP failure. And we're coming down below here and we'll get an SMB. Okay, so now we have an SMB. What could we potentially be targeting, right? So now we have to think, where is liquidity? So I can delete this all off the chart. Well, I'll delete it. Let me mute the trades first so I don't lose these. Actually, you know what I'll do is this. I'll just grab, I'll grab everything here. Group it all and do trade 1 to 3. Is that all we took? 3 trades?
Yeah.
Okay, trades 1 to 3. So I'll just mute those for later, right? Then I'll upload those into Notion on my own time. Okay, so what?
I don't know.
I think it was, I think it was 3. Either way, I can export and then see. Yeah, it was 4. Yeah.
Yeah.
So I must have deleted one off the chart. So only 25% win rate right now. Not great, but that's okay. We don't have enough data for it to even matter, right?
Yeah.
Okay, so if we're pushing down from this liquidity, this is higher time frame liquidity, we can start to expect lower time frame structure to fail. So we can target this low, and potentially this low. This is basically all subs. So if we come below this low, then we're going to push down and take out these lows. On the daily as well, this is all sub. This is your most recent ISP is down here. So price may want to push down below these lows and then push up or potentially below these lows. But considering that we're overall very bullish, we just want to basically target that next area of liquidity, which would be here and potentially here if we really want to push it. But the easiest answer is here. Immediately now we can see we've taken up the high, set the high of the day, and pushing down. The next obvious area to take would be down below here, right? So we're going to look for trades that are in line with that. We have SMB here. We have ISP, ISP. We're just going to look for that lower ISP. We can even take a trade right here, just like this. Target this low. Completely fine trade. But that's not what we're testing, right? We're testing. Well, technically we could. I don't see why we couldn't take it because the CO M15 or M5. This is technically still CO on M15. Like this is still bearish order flow on M15 and M5. So I don't see why we can't take this.
Yeah.
Even though it's not the most refined, but how do we place it?
Pro MTF, isn't it?
Yeah, it's pro MTF. Like we
Testing.
had the 1 hour SMB. So
Yeah.
Place order, sell limit 1%. Okay. All right. So we hit that first one. We can expect a reaction here. Price may want to pull up now. Yeah. So the question is, are we just going to tap into this, or does price want to come back down and take the structure? Which would make sense to see a failure here, but it's not guaranteed. So we'll see what happens.
Cancel your order.
I don't need to cancel my order yet because we still have another draw below. Yeah. If this gets taken, then this last one gets taken, then I can cancel my order. Because structure still is from here to here, right? This is the order flow range on the MTF. Is this high to here? So ISP still hasn't hit the structure level. So this, in theory, is still a level that I can trade away from. And now we can target down into here if price comes up into here. Notice we don't need this inducement into it and all that shit, right? Because we know that this already takes higher time frame liquidity and it's yet to be tapped into. So if we get tapped into here, it's good. Okay, tapped in. Pushing down. We can move that down to here. So let's look at this. The last up candle is your OB, right? So as long as we're holding below that 50%, so I can just put this a little bit there, a little bit up there. Taking on a little bit extra risk, but whatever. This should be protected, right? It's just covering that ISP. Okay. Time. Time, 8 a.m. So almost market open. There's market open. Pushes down. Takes liquidity across the highs. Right, so this is that inducement, right? That we don't really talk about here because it's not too important. The reason we don't talk about inducement is because our entire trading plan revolves around liquidity already. It's already built into the plan. We don't need to really specify it. Every time we have a draw on liquidity, that's your quote unquote inducement, right? So now we've had a new draw on liquidity, and we're going to look for a 5-minute order flow to take control, and we can look for a potential entry. Did we just take the high here? Love to see if that, okay, that takes the high. This is nice. This is nice. This is nice. We can take a stab at this, cover that high. Try and get involved here. Technically, we would actually just have to market order this because this is still a stacked FVG. What we can do also is add a fib to the leg like this, and then you can see which one it covers, and this will be the FVG that you pick. This is just a way to refine as well. So little tips and tricks here. And what would we target? We'd be targeting basically that same level. We don't need to target that deep. Let's just go for, you know, a little bit of R here. Depends how fast this really wants to go. We'll see. I'll leave it open, but my mental target right now is just right here. So now we can place order, sell limit. Okay, tapped in. Selling off. So now we got 2 entries going on. Very choppy. Oh, taken out. Okay. Surely taken out, yeah. Okay, we'll wait for that same thing to happen again and potentially take another entry. Because still, it doesn't matter that we're coming into our stop on the initial trade, right? The trade idea is still there. And we're trading pro ISP. So we'll see what happens here. 15 a.m. Okay. So bias was right. Just gotten a little too early. I don't see any news here, but that's a big candle just for randomly at 345. Could be another pair that there was news on, like interest rates on like Canada or something. Okay, so take of an old high, displacement down, right? So what does this mean? When we get a take of an old high, what does that give us? A type what?
1.
Type 1, yep. So ISP here, up here, breaks down, push down, type 1, displacement away. This is a beautiful setup. This is usually what we're looking for. We're going to enter on that newly created FEG, cover the high, target the low, place order. There's the FEG tap. We're going to expect that this continues to form new ISPs. Okay, gaps down. Holy shit. All right. For whatever reason. Oh, spread hours. It was entered out of spread hours, therefore it's okay. But in reality, I would have closed this around 4 o'clock, but depends what you're trading. If you're trading CFDs, you don't have to. Okay. Let's see the slow break. Okay, there's your most recent ISP. So we can start to trail like this. And we're just going to target these lows here. This should be protected. Yep. This comes in, pushes down. If we run this high, there's probably another entry opportunity. It's got to run right above here and then push back down. FEG. I don't know where we'd put our stop here, therefore I can't take that trade. And there we go. Beautiful. So from down 2% to up 8.7%. Good, right? Because the market started to trend in our favor. and we're just following those MTF ISPs. So now we have potentially a tradable model. We'd obviously have to get way more data on this, right? But we have a potentially tradable model. Let's rewrite that now. Okay, so let's redraw this. So I forgot to add something to the photo. Well, I guess I could just do this. Hold on. Just give me one sec, guys. Go to paint. New, boom. Okay, beautiful. There we go. I need to write. We're gonna do trail. Oops. 14 font. Trail stop. Stops to CO. This would be on your entry time frame. ISPs until stop until taken out, to be clear. Or still stop or profit. There we go. Beautiful. So this is exactly what we're testing.
Where is it?
I'm gonna post it in, I'll post it in the Oracle and I'll post it in, let's see. I'll post it in the PDF and diagram section. So I'll write this as testable and testable model. Okay. So this is more, again, testing phase 2 stuff when you can start to refine all the concepts into specific setups. Okay. And then you're going to be able to, you need to test them because testing them is going to prove to yourself that they work. And you can, mindset is an absolute result of proving through numbers. It's not a result of reading books. It's not a result of waking up early. It's not a result of fucking hitting the gym. Yeah, that's being a responsible person, but that's not going to give you a good trading mindset. And I mean, I'm not the most consistent guy in the world when it comes to that stuff, but my trading is pretty good. So there you go. But collecting data is what mindset is a result of. So if you can go here and you can collect data on this and you know when this model you can execute and you have a playbook mentally or literally in a scrapbook, like a playbook of setups, you know what conditions they play and you know when in your tool belt to pull out this setup or to start trading like only the pro ISP setups, when to start ping ponging, right? When to start favoring like your 15-minute draws on liquidity and trading both directions, like in a more of a range bound market, when you're going to start trading from swing points instead of ISPs, right? Like this stuff you can be able to pull out, but it all comes through testing like this, right? Very refined. Yeah, so let's continue for a little bit. But this is working out nicely. Okay, we still, guys, we still have another draw on liquidity above us. But we are starting to shift now. So we're going to have to reevaluate across the board of where we can potentially be trading to. So I'm going to, just like before, grab all of this and group it and call this trades 4 and 5. And then hide them for later. And then the rest of the chart just delete. Okay, so prices come into that type 1, right? That we were talking about. So prices come into that type 1. Did not take the high, and that's fine. We can still expect a reaction from here. Reactions are not necessarily only coming from like liquidity above old highs, but also type 1 regions. Because we expect them to be strong. They're not going to get ran on the first attempt. So we're going to expect a reaction from here. Where, guys, can we expect a reaction to? Or in other words, if we are to take buys, where are we likely to take buys from? Works.
Down in this FEG.
Yeah. So the first area would be below this low, right? This FEG. Beautiful. And this is how we get bias. It's understanding where on like a candle by candle basis is price going to ping to on the higher time frames, right? Where's price likely to go? Where's price likely to draw to, right? Basically. And the obvious marker here on the chart is this FEG. Price is likely to draw to this level. We've just come into a high value area and we're going to come and ping off the sell side, right? Where is that? Well, this is the most obvious one. So that's what we're going to stick to. Price can absolutely come below this. We don't know, but price is likely to come and ping off basically this region here. You have to reset. Alrighty. So now we have a higher time frame drawn liquidity and a higher time frame bias. Okay. Now we also have 4-hour SMB, right? We've taken the trade from up in here. This obviously held. We saw that this held, traded down, and we're now in bearish ISPs. So one here. This is a swing point, of course. One here, and we're asking ourselves, well, where's the next ISP likely to form? We have a gap in the market here. And that's about it, right? So that's it for the 4-hour. And now that we have a higher time frame bias that's being confirmed by our MTF, what direction are we going to be looking for? Are we going to be looking, would it be wise to try and ping pong the market, or would it be wiser to just trade pro trend?
Just wait, pro trend.
Yeah, trade pro trend, exactly. So we can start to map out these ISPs here on the 1-hour as well. We have a little take on liquidity here. And then another ISP here. So our order flow range roughly is either from here to here or from here to here. We don't know. It depends on what's in control, the 1-hour or the 4-hour. So what we do and the question to ask is, how do we know what time frame to look at? We have to look at both. We have to see what's more clear. The chart tells you generally, what's in control. We have multiple areas that we can confirm, and that's we use confirmations, right? So we can confirm this area, for example, or this overall type 1, I should say, this overall area or above it, right? That's how we're going to be looking at this. So basically what we look for is what your drawn liquidity is going to get tapped into, initiate bearish order flow on a lower time frame, and then that's what we'll ride. $11 a.m. Okay, we have an FEG here. Price may want to just come in, tap into this FEG, and start to trend lower. Okay. Let's see. If price wants to tap into this region, take out this liquidity, and start to displace. Still open, still valid. We're getting later in the day now. So I'll just go to the next day. Okay, so it doesn't happen, no problem. It ends up creating a 4-hour FEG and tapping into it, but that's way out of session as well, so no problem. Okay, so we hit that weekly FEG. We're still bearish because this is a higher time frame area. We're not expecting this to give us an immediate reaction on a lower time frame. Well, actually, I shouldn't say that because that's a little a little deceptive there. It's bad information. What we'd have to look for rather is for the medium time frame ISP SMB, right? So we need to wait for that medium time frame SMB if we're going to take longs. That's what I should say. So disregard what I said earlier. You see impulse. Where is it coming? Likely pushing up above this region, but we're only trading pro ISPs, right? Because that's the safest thing. So we're just going to wait. OB here. Taps into the OB. Last down candle digs into liquidity. Trading away. It's a nice reaction. but still nothing that we can trade at all. The only trade available here would be because we're counter and we're come from higher time frame liquidity, which is where the best trades come from. We did a video on that. Displacement from higher time frame liquidity, draw, like manipulation, order block or FEG to trade and just target that, cover the swing low.
And why didn't we take that?
Because it's not in the model that we're testing.
So is this sorry, is this not an I or an SMB?
What's our model?
Pro mid time frame.
This is not mid time frame. It's LTF. Mid time frame is 4 hour, 1 hour, right?
Sorry.
Yeah.
Sorry.
So we'd have to wait for this level to break up here. When this level breaks, then we're back in line with it.
Yeah.
I should have wrote that on the thing. So I'll write that. Oh. Like I know that personally I can call, I know that from my understanding of the plan that I can call the M15 an MTF and trade like the 1 minute. But for consistency's sake in this testing, we're gonna label MTF as 1 hour and 4 hour ISPs. Okay, so we're not getting too confused. Okay, we're expecting this ISP to be a strong level, right? Takes liquidity. Doesn't break above, right? We're gonna look for that. Oops. 4 hour break. 6 a.m. almost in market open. Comes back, taps back into that order block. Now it'll probably rip. Okay, breaks the high. But still no clear like closure, right? So in reality, I'd probably be looking to take trades here without the closure, but let's keep it consistent again for testing, right? All right, let's see if we come down back down now. So we're still bearish, right? We've never actually closed above this. Still bearish. All right, so there's probably plenty of trades in here on a lower time frame, sure, but again, that's not really what we're testing here. Okay, so we've had a draw on liquidity, push down on the 1 hour. Maybe looking to fill this overall weekly imbalance. 7 p.m. go to New York session. The range is from here to here, so we can't take a trade. Noticing that you've been taking more wins using that method? Yeah, 100%. It's easier to understand, right? I've been thinking about it quite a bit, and I think that would be because what I trade is different, right? I work, a lot on the LTF, and I trade really reactionary to liquidity grabs, both sides of the market, but that works for me, right? But teaching that is quite difficult. I think that's more of a experience with the system type of thing. So calling the MTF, the H1 and the H4, probably the best place to start. Yeah. And then you trade the 15 and the 5 minute order flow, or you wait for a daily draw on liquidity and you trade the H1 and the H4 order flow. That can also work really well too. And then you target like a weekly level if you're swing trading. Yeah, let's see here. Nope, doesn't want to give us any opportunity to get involved. I thought maybe we'd come up into this region up here. Oh, this is the 1 hour, damn it. It doesn't seem like there's anything here on the 15 either, like for an initial draw on liquidity. There's probably something in here, but still haven't hit that the bottom of this FEG, which seems like that wants to be the target. ISP on the M5 is most recent ones here. I don't now see now I'd be getting really deep into like the 1 minute stuff, but I don't want to do that. Just because that's not what we're testing, so. Takes that high, so you got 15 SMB. Why is this important? Because we're in a larger time frame area of liquidity, right? So where's that most recent 1 hour SMB ISP? You're right here. Right here. Actually, technically right here, but this doesn't actually break. Oh, it does. It's the cause of the failure of this low. So this would be it. So now we have a bullet. Now we have an SMB. So medium time frame is now bullish. Okay, cool. Too late in the day, go to near accession. Medium time frame is bullish again. The 4 hour, however, is not. We'd have to basically come above this high. Okay, taps into that 1 hour FEG. That's our draw on liquidity. We have a next draw on liquidity, internal structure, weak level, right? Does everyone understand that?
Yeah.
Johnny, you understand that?
Yeah, I'm
Okay.
just taking a look at it there, yeah.
Yeah, so we have ISP, SMB, right? If I'm going too fast, let me know. This is the high. Pushes down. Into an FEG, stacked. Come take out this high. What do we need to see?
Displacement.
Yep. Don't get it, wants to come lower. That's why we look for displacement, right? We don't get into shitty trade ideas. Still technically a protected level. And sweeps below. Okay, so wanted to sweep below here. Sweeps below, displaces away, breaks. Here. And not giving us any trade ideas. This is not what we want to see. Like to take a trade, that's for sure. This is not very clear. Still looking to basically come and take out this low. I'd probably be looking in real time to take a trade from this region after we flip this FEG. And created a BPR, but that's not what we're trying to test. Oh, technically. FEG up in here. See, I didn't see that. That could have been. Now things are changing a bit. So that might have been a possible trade idea. Now we have displacement. So now this is starting to make sense here. Okay, but still shitty time of day. So we're gonna go to New York. And that's it. We're just in shop. This is also a swing point. So taking out a swing point. Now this has given us some signs that we could potentially be going bullish because we've just broken above a swing point. This level, of course, needs to hold.
Sorry, why is that Why is that a swing point?
Oh, you're actually right. It's not because this doesn't break structure.
Okay.
That's just an ISP. Just in shop, just in shop. Takes out the low. All right. Here we go. Now we've had a major sweep in the market that's taken place here on the daily. We've taken out the previous daily lows. We've come back at the bottom of the weekly FEG and we're starting to push away. So now we can start to actually look for buys. If they offer, obviously. Let's go to New York session. None of this stands out to me. Let's see if we can get an ISP failure. This should have been a sweep that puts us lower. So we want to see that this high gives. We want to see it give. Let's see it give. Okay, there we go. So now we actually have an ISP failure. So this is giving us signs that we're bullish now, okay? Go to New York session. Down. Still chopping away. This level holds. ISP range is on maybe it's on the 4 hour. Nope, still chopping. So really nothing. We've had an ISP here, ISP just here. This doesn't actually break anything. Break structure back down, technically bearish. Right, so we're just in chop. I don't want to push. Our model doesn't work in this market condition anyways, and we're not getting any trade opportunities. Where can price want to trend to is the question. Potentially below here. Let's clean this up. Track ISP, 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 ISP from here to here, pushes up, takes liquidity, could be seen as an ISP. We have to see on the 1 hour. Comes back, fills imbalance, pushes away. And then we have a tradable region from here, and we're looking to come take out this low. Right. So sometimes when you're over at, especially in backtesting, this happens a lot in day trading. I mean, in live trading, not so much because you're not excessively marking up your chart, but we were analyzing chop, right? And that happens. Best to clear your chart out every once in a while, reevaluate, and then follow structure like this. So all I'm looking for now is like, where is that next draw on liquidity going to come from? Region up in here. We have a region up in here. We've taken sell side, so we really have to see what's going to happen here. Chop, chop, chop. Take on liquidity. Push down. Time is it? What do you guys, Paul? I mean, yeah, Paul, are you here?
Yeah, I'm still here.
All right. What do you walk me through this? So I'll guide you here for a second. Structure is from here to here.
Yep.
Right. We have a drawn liquidity below. Technically, we're just following order flow. This is possibly the next drawn liquidity. Most likely is the next obvious one, at least. We have an area of liquidity here on the 1 hour. And that's about it, right? And then we have all the way up in here. So we could potentially be trading this and just continuing this down. So when we've tapped into this region here, holds this resistance. We've taken liquidity in this little FEG here. Right? So
Yep.
this is your draw on liquidity, and we have potential next draw on liquidity, basically continuing order flow. Can we take trades here? Or should we
I'll look
wait?
Yeah, I'll book on the 15-minute, not the 1 hour, and see if we could find another.
All right, let's do that. It doesn't matter if it comes up. Let's see if we can get an entry opportunity. Still holding and respecting.
Yep.
Still respecting. Okay, now we've had some displacement out.
Yep. Got something here. But I would, because we got a break a structure here or sub break. Would it
We can
potentially
wait.
for the break?
Yeah, we can wait for that low to break.
Yeah, I'd wait for that. I would personally wait for that. Yeah, there we
Yeah,
go.
okay. Beautiful. All right. So now,
So now I would look for a trade in here.
all right, let's just clear this up here. We got the 5, the 30-minute. Okay, so the 30-minute, we got something a little bit clearer.
One here.
So we can try and take this, yeah?
Yep.
We may not shoot that far, of course, but maybe we'll just look and see
So
if there's
let's look
any
for our-
here.
we've got FAG in here. Yeah.
You can look at target the base of this FEG basically.
Yeah, that's what I would look. Yeah,
The
'cause
base of the
that's
FEG or the 50%. So the 50% is not
a great trade.
a great trade, so we'll just target the base of it then. All right.
Can you just zoom in? Can you just zoom in a little bit on the RR? Yeah, all right, cool. Yeah, because we're trading off what, the 30-minute? Yeah.
Yeah.
So I'd go for that candle.
So stop just above candle 2 or above the swing high?
Just above candle 2.
All right, that works. Place order, sell limit. All right, pushes. Let's see, do we get tagged in? Still valid because I haven't hit in the draw. All right, taps in. And beautiful. Nice.
Nice.
Very nice, very nice. So let's look at this trade because this is a really nice one. This highlights basically, you know, everything we do here, which is that price doesn't need to come back to your original zone, right? Now that stuff works when you're trading in a condition like this, but once you start trending, it doesn't work, right? So how are we able to get into this trade here? First off, we stepped back, remapped structure, okay, because I was in there over analyzing. Happens all the time. It especially happens in back testing because you can skip through price so quickly. Over analyzing chop, right? Step back, reevaluated the 4 hour.
Yeah. Yeah.
We looked into here on the 1 hour. This is obviously it feels
That'd be a
imbalanced, right?
swing point. That would be a swing point as well, right?
Yeah, on a lower time frame, yeah. On a 4 hour, it's definitely. I mean, on a 1 hour, it definitely is a swing point. So we can actually map that up because we're using these. We're kind of
Well,
using these things interchangeably when we're talking about MTF.
A question there, right? Because like, yeah, on the lower time frame, it is a swing point, but at the same time, we're trading off the 30 minutes. So in theory, would that be the higher time frame swing point for the 30-minute if you're going to trade off the 30-minute?
Well, yeah. So what we're doing right now is we're trading pro medium time frame, and then we're looking to trade order flow on the 15 or the 5, the 30-minute too. That's fine, right? In this case, the 15 and the 5 weren't clear, so obviously we're going to go up a time frame. But yeah, this is and this is also a swing point too, because this actually comes in and taps here. So this becomes a swing point as well. And this is when swing points become very powerful. Yes, you do have to use a little bit of discretion here. Like you can sit here and I can overanalyze the 1 hour and map every ISP out, and you're going to come to the same result that this is a swing point and this is a swing point, right? So I'm not going to go and do that. I know that for a fact it's a 1 hour and this is a 1 hour swing point, right? Pushes down. And then we get that big displacement move. And we don't really have any big major areas to trade from, right? We have all the way up in here, but price doesn't actually have to come all the way back up into there, right? We're not really reacting to anything that's, our draw on liquidity is all the way down here. There's really nothing here for us to react to that we haven't already reacted to. We've pushed up from here. So what we did was we jumped into the 1 hour, and even on the 1 hour, you can see we had one area to trade from up here or right down in here. So we look to confirm this, right?
Sorry, why would we trade from here? Oh, so sorry, if it came back into that area.
Yeah, if it
Sorry.
came back into that area, but we don't have to, right?
Yeah. No,
And
sorry, I
this,
thought you were-
this,
you had a trade ID in here for the FAG, but we never really tapped into it.
yeah. So, and we have to keep that in mind, right? If we're always looking for price to do this full retrace, you're never going to get in any trades, right? And when you do, it's probably too late for you anyways, and it's just going to end up running the high. Okay, so what we're doing
So if that's
instead
the
of
case,
trying to
right,
overflow.
like we're in this zone here, but like we sort of got like a break here, right?
Exactly, that's what I was leaning towards,
Okay.
right? So we
essentially,
come in and it fills in balance, and then it breaks. So that gives us a new order flow range here on the 1 hour from here to here. So this is now what we're looking to trade. And realistically, you can enter right off this 1 hour FEG, cover the last ISP high and trade this. Perfectly
have
fine
that.
trade.
we had a
Perfectly
couple of-
fine trade. And another one here. Perfectly fine trades. Yeah, this is also an entry. But what we did was we went on the 30-minute. That's fine too. We went on the 30-minute. We waited for that displacement. The displacement
Yep.
comes in. It pushes up, takes the high. And then we waited for that next break, right? Just to make sure that we're on side. I think
Because
now
you know what would have happened? I think we would have gone break even because we would have broken this, right? If we got into here, got a break even, got taken out, come back here, and then got into this trade.
I don't know. I don't think we would go break even because there's nowhere else that we could have, this is not protected. If we follow our rules, right? Rule 3 says if there's no FEG
yeah.
available, take sub as lick, and this, or if there's one FEG available, use that one. So it would be
Yep.
this one. But yeah, like the break wasn't even like, this isn't really displacement. This is kind of, it's not that, but this is clearly displacement, right? So the first trade's a little iffy, to be honest. But the second trade that you took here is perfect trade. Perfect trade. Yeah. Absolutely perfect. So we're just following that order flow, right? So order flow range was from here to here, basically. We do have a sweep here, breaks down to here. Fills in balance, so it's from here to here, right? So we can excessively start to map out all of these as well. I do think it's a little excessive, but we have order flow range from here to here. Then we have a tap in, taps in, fills in balance, breaks structure, new order flow range, sweeps liquidity, fills in balance, breaks structure, new order flow range. This one fills in balance, breaks down, new order flow range, right? And you can see ISP, lower ISP, lower ISP, lower ISP, lower ISP, lower green dot, pushes up, breaks, puts us in a new order flow range, lower green dot, breaks out of that range, puts us in a new order flow range, lower green dot, right? And this is just how we're trading it. And that was perfect.
Just for you, Jay.
What?
Just a question for you.
Yeah.
So we've got this range here, right? And
Yeah.
you can clearly see that it actually taps into it, right?
Yeah.
Would we wait for this to get liquidated because it's tapped into this, like our premium, like not our premium, but our equilibrium? And this would be the
Ideally, what I would have liked to see here is like some of that substructure get taken out.
right. Okay, so
Right,
you
but
in theory you wouldn't have taken this.
yeah, no, I wouldn't. But you could
Yeah.
technically do this, right? Is just take it on the green, the blue area of
Yep.
the golden area. Cover
The golden-
the previous ISP, right? A
Yep.
target. But realistically though, I'd be a little bit iffy because we've just tapped into liquidity. I would probably expect a deeper pullback, and that's what we were looking for, right? We were either looking for a deeper pullback or an extension, like a new order flow range, and whichever one comes first, right?
Because So remember, like, if we look at this, right, it's equals, but this clearly displaces through, right? Usually we get a wick before we go back up.
Usually, yeah. Like
yeah,
this is
so-
definitely is a very clean break.
Yeah, so like in theory, like this would have been a good trade as well. Like if you saw this clear displacement.
The reason I'm a little
It's
iffy is
straight
because you
through.
can see as soon as we come into liquidity, yes, it displaces through, but then it immediately stops. Right?
So would you look for another candle?
So
like
what I
similar
would
to-
look for is the break first that puts us in the new order flow range. I would either wait for this, come back up into this area, or break
wait for the-
new order
Yeah.
flow range, right? Like this sets a new range. You could trade this one. This one's okay. And this one's even better. The one that comes after it is even better.
Yeah,
I have
always- always-
no gripes at all with this trade. New order flow range, displaces, leaves an FEG, follows the rules. This is perfect.
Again, it's like you don't always have to be the first to get in, right?
Yeah, that's the beauty of it all, right? Is you don't have to be the first guy to get in. And we're up 11.47% when we were down 3%. So pretty good. Pretty good, pretty good.
Pretty good.
All right, so we have a new order flow range as well. One FEG available. Are we reacting to anything major? No. Therefore, we could still potentially look to enter at this region. Now, your stop placement's not going to be, great. Unless we maybe get off the high of it and we target like a 1 to 2. Or we
Can we go-
target,
You're on the
What?
daily, right? I said, could we go down
we can look to
Fine.
target this low here,
could we look?
which is the daily draw.
So would we be waiting for another like the 4 hour to appear here, or are we still in the order flow where we could?
We're still in bearish order flow and we haven't hit a draw yet, right? So we can continue to trade it.
Order flow is
Yeah.
in play. at the
Yeah,
moment.
so we can continue to trade it. This is the thing. It's not about getting in the right time. The truth is, it's not about getting the biggest trade, right? The truth is, look, you had all of these are potentially trade opportunities. All we have to do is follow these rules until we're wrong, right? We've been right now. We're up 11.4%. You slap on this trade and you're wrong, that's fine. I would rather be right 10 times, wrong once, than wrong 10 times trying to buy every single low to be really right once. You know what I mean? That's our whole trading plan. So this, even if we think that, oh, this is a little bit, it's getting deeper in the leg, it doesn't matter, right? I'm okay being wrong once. It really doesn't change anything if I'm wrong once. Okay, right? We just didn't get tagged in, but again, right? Following the rules, just didn't get tagged in because we weren't entering at the base of the FEG. But you know what I mean? Doesn't matter what we think or what we feel.
We could have looked at the 50% there in that.
Yeah, we could have looked at the 50%, right? The 50% of the FEG, 100% would have got tagged in. We also could have looked on a lower time frame to see when we tapped in, if there was like some displacements going on and all that stuff. But I mean, it's pretty choppy, to be honest. But yeah, here on the 4 hour, there's an FEG, right? So maybe we could have had the limit set to here, like this.
Yeah.
But yeah, we didn't get tagged in. That's fine. Still following the damn rules, right? Doesn't matter how deep we go. It starts to change. See, that mentality of just take the order flow trades as long as you can. It's only valid until we hit the draw on liquidity. Now that we hit the draw on liquidity, that whole mindset changes. Now we're like, okay, we hit our target. We no longer have a direction, like a clear draw on liquidity. It's very possible that we're going to get a pullback now. And I'm going to call it a session today, but let's see what happens anyways. Like this price starts to pull back. Yeah, right. It goes a little bit deeper, but then we start to get that pullback just below that low, right? And that's when we have to start being a little wary. So I'm going to replay to the date here, but we'll call that one a session. All right, so 11.47% in just what? a month after being down 3%. Really good, bro. Really good on one pair.
Yeah.
Very good, very good. So again, what are we learning here? What's the task here? So first off, everybody should be doing their testing phase 1 still. What? Which is basically you going through and making sure you understand all the concepts. It's not about getting racking up a win rate or collecting the most RR, imaginary paper money. It's about putting on as many trades as possible that fit the plan, and then seeing what the common mistakes that you're making are. And then that shouldn't take too long realistically. Like you can do 100 trades in 2 weeks or less, right? If you're really active with it. But you should just be, if you do even just 3-4 trades a day, right? Like this session we did how many trades? 1, 2, 3, 4, 5, 6, 7, 8 trades already in an hour, right? Of course, I'm probably going to be a little faster, but right now, but if you can get 4 or 5 trades in a day, how long is that going to take you to get to 100 trades, right? 25 days or less. So, a few weeks. And I'm sure there's days where you can go at this for more than an hour if you really wanted to, right? So within a few weeks, you should be able to get 100 trades down. And then that's all you need. All you need is like 100 trades. And then you can go in there and we can dive into common mistakes, iron those out, right? Work through them. And then you do the testing phase 2 and you start testing individual trading models like this, right? Like a pro MTF one like this. And it's trading really fucking well, right? And then you have that in your tool belt and then you can take it live. That's it. It's 3 steps. All 4 steps. Learning the course, step 1. Case study, step 2. Testing phase 1 is acknowledging your mistakes and figuring them out. That's step 3. Testing phase 2, develop your setups, learn them like the back of your hand, collect good data. And then step 5 is demo or live. You can take it live right away if you really want to. I suggest demo, but I think after going through all these processes, you can basically take it live. Demo's not too important unless you have horrible psychology. Then you do demo and then step 6 live or step 5 live. Okay, so you guys are already halfway there. If you're in phase 1, you're halfway there. Phase 2 takes no time at all. Phase 1 takes a long time. Phase 2 is quick as fuck. Once you iron out your problems and you know exactly what you're looking to test. I just did eight trades in an hour. I can probably do 100 in a week. You know what I mean? 100 in a week, and now I have a fully tested trading model that I can take live within a week. You know what I mean? And anytime that I want to add or subtract something to my trading system, I can do that in like less than a week, because I already know exactly where to start and what to test and what to look for. But that all stems from doing the work for phase 1. And then you take it live. So complete testing phase 1, 100 trades. Okay. Try and be accurate with it. Don't rush it. That's the main thing. Don't rush it. Don't give a shit about your winning rate or your RR or anything like that. After that, testing phase 2 has specific trading models that fit the concepts and trading plan, right? If you notice here, we've tested a new trading model, but the entry system never changed. The liquidity concepts never changed. All that changed was that we've only traded MTF ISPs, and we only traded the M15 or the M5 to M30, basically. We didn't trade no M1s, right? And we always had a daily bias. And that's it. So now we've refined all of that, all these concepts into a trading model. And that's it. So this is how you guys should be working through things after you're done testing phase 1. Get testing phase 1, hurry the fuck up so that I can help you out, because eventually I'm gonna, I don't know, I might be working with a new community soon. Now everything here will be the exact same, right? Like I'll be running everything. There'll be no one else operating the business or anything like that, of course. But what this means is that there may be a bigger influx of people that want to come in, right? So you guys gotta push through, get your testing done so that I can help you before I'm rammed with shit to do, right?
Yeah.
You feel me?
Oh yeah.
Yes, sir.
All right, guys. Well, that's it.